Hello everyone, welcome to the Trendline Investor channel. So in today's video, I'm going to teach you how to find stocks which are reversing from major support zones. I'm taking 3 examples, and along with this, we'll take 3 more examples to see which stocks have recently changed the trend to an uptrend. So let's get started. And as always, this video is purely an educational video. So my objective here is to teach all of you to pick stocks for investing using technical analysis and also trading as well. So this is purely a video for educational purposes, and I'm not a SEBI registered advisor as well. So let's get started. So the first stock for today, which is a reversal stock, is IG Petrochemicals Limited. Now, a quick look into the fundamentals here. So this company is a small company, around 1,570 crores. PE 7.84, ROC is 22, 17.5. Now, as a rule, always remember that if the PE is slightly below the ROC or way below ROC and ROE, and if the stock is really profitable and the company is profitable, the sale is growing and the PAT is growing, so there is a chance that this stock can be undervalued. So you can take this probably as a thumb rule and look at this. These stocks usually, and if the stock is going sideways, then probably it's undervalued and time to head higher. But you do not have to go and buy the stock immediately. You will have to wait for a confirmation of an uptrend and then you buy the stock. Okay, so that's the company, a short overview of the company. This company has been growing its sales by 30% CAGR in the last 3 years. Profit also has been growing at 116% CAGR for the last 3 years. Right now, these might sound very overvalued, but if you take a look at the net profit here, it has been almost increasing from 60 crores to almost 200 crores, right? So overall, the PAT and the sales growth are looking wonderful. And it's a chemical company. Now remember, many chemical companies haven't done well in the last couple of years. They have been going sideways with the overall broader market. So I think it's probably time for chemical companies to outperform going forward. So taking a look at the P&L statement here, since last 10 years, they almost more than doubled their sales. It's gone from 880 crores to 2,000 crores. And you will see last year on year also, we've seen a very, very good jump. The operating profit also has gone up. We've seen a steady increase from 40 crores to almost 400 crores. It's a 10x increase. But this year in financial 2023, the operating margins have come down, because of which the operating profits also have come down, right? But I think it might be the end of this. Probably we might see an increase in the margins going forward. Also PAT, profit before tax, also has gone up steadily, and also here the net profit, which is the PAT, also has gone up. This company doesn't have much of interest payment, is very less, so I think it doesn't have much of debt. Even if it has, it's probably just very less debt which it's servicing. Okay, so taking a look at the long-term charts here, the weekly charts. So IGPL had a breakout somewhere around July 2021. We had this massive breakout here from a nice inverted head and shoulders, or you could just call this horizontal breakout here. A massive green candle with volumes, and then the stock was in a steady uptrend. Now remember, the best point to buy a stock is at this point, right? So when a stock breaks out from a downtrend and heads higher, and then you see this beautiful long-term uptrend on the weekly charts, and then the long-term downtrend breaks, and then we are heading lower and lower. And now what's happening is this stock is showing reversal signs. So this came in my daily scanner, CCI crossing 100, and here if you see on the weekly, it is yet to cross 100. So the long-term trend is still down, but I am predicting that this stock has probably made a short-term bottom or a medium-term bottom. Reasons here, the first reason is this long candle over here. If you see, we had a long wick over here somewhere around November 2022, and then we went sideways and just came down, and then we are again reversing. So again we had nice consolidation around that low here, and again we had a dip, and again we're reversing. So I think we have made a bottom, because this also is a major support zone over here. If you see, we had some nice consolidation here, and we are reversed from these levels. So overall, I think we have probably made a medium-term bottom here, and volumes also increasing this week. And I think if we break out from this downtrend, then we might enter a long-term uptrend. Now remember, it's very important to understand that you should not be going very bullish on any stock until the uptrend on the weekly charts is up, right? Now you can take an early entry, but until the weekly charts turn bullish, do not take a major position or do not be over aggressive and buy into the stock. Okay, so that's the weekly chart here. Now zooming into the daily charts, the reason why it came in the daily scanner is because of this move today on Friday that we had with volumes, CCI crossed 100, and that's why it came in the CCI daily scanner. Right now here, if you see, we had this nice horizontal resistance over here. Stock went sideways, consolidated, went all the way up, got rejected, came down, and again it went here, got rejected, and not came down, and now we are heading higher. So this looks like a major bottom. We are forming higher highs for the first time, a very strong breakout with volumes. So for that reason, this could be a good short-term pick, definitely. And for a medium term pick, the weekly charts need to be in uptrend. Remember that point which I mentioned. Now, any dips towards levels of 500 could be bought, and you can probably buy the stock. So you can buy the stock at current market price with the stop loss of 470, which is this low over here. Now remember, whenever you keep stop losses, it needs to be on daily chart. But if you're a conservative investor, you can also keep it at the weekly chart somewhere here. But that's too deep a stop loss for me. And I'm fine if the stock hits stop loss here, and then I might enter again when the stock hits higher again. So if your stop loss gets hit here, it's how markets behave. Like 50% of your trades might hit stop loss, and the remaining 15% might do well. So if you're conservative, then keep your stop loss somewhere around here. So you can buy with stop loss at 470, which is just 7.8%. Not bad for investment candidate if you're looking for investments, and you're looking for targets of 800, which is 57% returns from here. Now that's a very good risk reward ratio of 7.25%, and that's the first stock for today. Let's move on to the second stock for today, which is also from the chemical space, which is Excel Industries. Now I did cover this stock some time back. I made some decent gains here on the daily charts, doing some swing trading, but now the stock is again reversing from a major bottom. So that's the second stock, reversal stock for today. Taking a look at the fundamentals, again a very small company. ROC is 9, P is 15.4, ROE is 6.69, and the sales growth has been 16% last 3 years, and the profit growth has been almost negative, right? But overall, if you look at the P&L, company has been growing its sales steadily year on year since 2012. So last 10 years there has been some decent growth overall, especially in the last 2-3 years we've grown steadily in terms of the sales. PAT also is kind of stable around the 130 crore mark, and here also last year's operating margins were impacted, just like we saw in the previous case. So again, probably a short-term bottom, and I think we might head higher in terms of the operating margins again. Not much money is spent on paying interest, so they don't have much of debt here, and PAT also is looking good here, around 160-80 crores here, which is almost stable. Now the stock has been correcting. It is still back at 2020 lows, 2021 breakout. Here if you see, this was the lows. We had a breakout here, so the stock is again back to that level. So in spite of the company reporting very good numbers, the price has not really appreciated much. Now we had a strong gap up here, but the stock came all the way down, filled that gap, and now we're reversing again. So from a technical perspective, this is how you find reversal setups. You need to find stocks which are near major support zones. By major support zones, I mean stocks, the price where the stock has reversed multiple times. Now here if you see, we reversed 1, 2, 3 and already 4th, and this 5th time we have crossed above that high point as well. So overall, this looks like a very good bet from a technical perspective. Also, the company hasn't done much in terms of price appreciation in spite of the fundamentals improving, right? So we had some good volumes. CCI is turning from bearish, from -100 it's turning up. So again, on the weekly charts it's not yet bullish, but on the daily charts it's looking very bullish. So moving on to the daily charts, we had a nice little breakout here. You can call this whatever pattern, but this gap down never got sold off. In fact, this was a massive accumulation here, and now we are heading higher. So volumes have been excellent. So this is a very good pick from technical plus fundamental perspective. So CCI, if you see, and RS also see, both of them are bullish and they're looking good. So you can buy the stock at current market price 982, stop loss of just 10%. Now remember, if someone tells you you need to have a very deep stop loss for investments, it is a myth. I mean, probably they do not understand technical analysis. So you can buy stop losses with 10% also for investments. They are very good points. And if you have a good 100% return, that's a 10 times risk that you're taking. So that's some very good setups that you can find with small stop losses if you have practiced technical analysis, higher highs and higher lows. Okay, so looking at targets of 1500, which is 50% from here, and that brings us to 5 times the reward to risk ratio that we're looking here. Okay, so that's the second stock. Now, if you did like my analysis, do me a favor by sharing this video with your friends. Teach them technical analysis as well, and don't forget to subscribe to my channel and like this video as well. So that's the second stock. Let's move on today to the third stock, which is CINELINE India. Now, CINELINE India is a turnaround candidate. Okay, so this company has done very bad between 1920 and 2022. But I think it's picking up again. The company has been selling a lot of its assets, non-core assets, and it's focusing on the cinema business again. So it has been diverting from the core business, but again, a newer management has taken over this company, and I think they are doing well of late. So it's a very bad company, as I said, past. So P, it was not profitable. If you see here, we have not had much income here. So it has been hardly posting a few crores of profits, and the sales also went down drastically. So overall, I think this bad performance of this company is probably over, and the stock price has already started appreciating the last couple of years, and it has been correcting recently. So taking a look at the weekly charts here again, we had a massive run up in the price, and then the stock started consolidating. Now again, this is a reversal setup. Now remember, reversal setup, I caught it using the CCI daily scanner, and that's how this came in my watch list today, or the stocks that we're discussing today. So we had a crazy breakout here, a strong move up, and now we are retesting. Again, the point note here is the stock reversed, the price reversed multiple times from this zone, and again we're reversing here from the same zone. And also this is a confluence of supports. Now confluence of support, what do I mean by that? If the price reverses from trend line, plus if the price reverses from the horizontal support, so we have a confluence of support acting here, the horizontal support and the trend line support, and both together are providing support for the price, because of which the price is moving higher again. So we had amazing volumes also this week. You don't see that here very clearly, but the volumes have been above average since last many months. Okay, so that's the next stock here. You can buy at 93, which is current market price. Keep a stop loss of 16%. Yes, it's pretty deep, but you have to wait and keep it at that swing low. Now, if you have dips towards the levels of 90, 85, you can buy more if you want. Looking for targets of 160, which is that highs over there. It might even head higher, so ride trends as much as possible, which brings us to 4 times the risk that we're taking here. So 16% stop, 72% return, which is 4 times the stop loss here. So that's the fourth stock. The fifth stock for today is General Insurance Company India. Again, the entire insurance space has been hit very badly, but off late, at least last week, there has been some noise in the insurance company space. Now also this company, if you look at the past, this company has grown its sales from 11,000 crores to almost 46,000 crores. Also PAT has gone up, but this company has not performed since 2017. It listed in 2017, but the company has not done anything in terms of price appreciation. Everyone who bought it in IPO listing are just sitting in losses. Now again, ROC is pretty good, ROE is also good, but PE is just 5.27. Now remember here, as I said before, if you find any companies where PE is trading below the ROE or ROE numbers, it's probably that the company is undervalued. Now here again, you should not buy it just because it's undervalued. You need to wait for the price to confirm and head higher. So that's from a short fundamental perspective. Taking a look at the monthly charts here. Now since 2017, as I mentioned, the stock has been in a steady downtrend. Now this is why you should not buy stocks on listing. It's a very, very bad approach to just buy stocks on listing day. Either you apply before and you get it on the for IPO, or you don't buy it unless you have a strong base, unless a stock comes out of downtrend. So in case you want to learn more about IPOs, I made a video on my channel. Check it out. It might help you understand how to buy IPO stocks. Now here in this case, the stock has been in a steady downtrend, right? And here, if you see, we have formed probably double bottom over here, but at least it's a major support zone, and we are trying to head higher. It came down again. Again, we're trying to head higher. Again, we came down, and now we are trying to head higher again. So for me, a change in trend is above this zone over here, and when we cross above that level over here, so it's around the 200 level mark or 190 mark. If we cross above that zone, probably we are heading higher towards levels of 300 to 400 levels. So moving on to the daily charts here, if you see, we had a crazy move down and a one-way move up, and the stock went sideways, and now we are trying to break out over here. So Friday we had a very, very good closing after this massive move. So I think here bulls are active now, and I think we might break out from this long-term downtrend over here and probably eventually head higher. So I'm not sure what the fundamental news is in the insurance space, but do let me know in the comments if you know. I'd like to also know what the news is. So you can buy the stock at 190. Stop loss is 6.3%, which is this low over here. Now, if you find setups like this, they are very, very good reward setups, right? So with just a 6% stop loss, you can look for targets of 42%, which is 6.6 times the risk we're taking. So that's the stock from the insurance space. And the next stock today we're discussing is Parag Milk Foods, right? So this again is a very small company, 24 P, 8.5 ROC, ROA 7.83. Here again, the company has not done very well in terms of profit growth, but in terms of sales, it has done very well. If you take a look at these numbers over here, they have been growing its sales steadily over the last many years. There has been a dip during COVID, but yeah, now it's recovering probably. And also 2022 wasn't a great year. We had some crazy losses over there, even in terms of operating profit. But this year, I think we have kind of recovered here, and the company is probably bound to do well going forward, right? So PAT also here, if you look, we are back again in profits after a bad 2020 year, right? So here again, this company also has not done very good since listing. A lot of people are stuck here in the stock. But what's happening now is since 2017, for the first time, the stock is breaking out of a downtrend. Now remember, trend change is still not confirmed, but at least a downtrend is probably over, and we might go sideways before a trend change occurs before this zone. So trend change occurs only above levels of 130, but for now you could also take a small position because we had a massive candle this week. Also CCI is turning bullish. This is a breakout setup, and related strength also is turning bullish. So if you zoom on to the daily charts, you see that we had a nice downtrend breakout, and then we went up, kind of consolidation here a bit, and now we are breaking out again. Now this is a nice breakout after 1 month consolidation with amazing volumes. So we might consolidate a bit here, probably because of the selling pressure over here, but I think the trend is overall up. Also the long term trend also will soon probably change into an uptrend, and you might make some good gains over here. So the stock is a very good buy at current market price 112. Stop loss of 12.8% for a target of 160, which is 42% from here. Now you might get much higher returns here, but just that the entire space is not doing very great. So if it does well, you might get much higher returns over here. So that's the fifth stock. The last stock for today is Jagran Prakashan. A beautiful breakout from a technical perspective here. But let's take a look at the fundamentals. Again, a profitable company, 10.8% ROC, ROE is 8.7, PE 10.5. Again, a small cap company. Now remember, if you want to really make good money, focus on small cap space. Do not focus on large caps and mid caps. Large caps especially, mid caps definitely you have to focus on, but do not focus on large caps because they might give you returns short term 20%, but then they tend to usually consolidate for long periods. And unless you are really conservative and you want to hold a large cap portfolio, go ahead. But if you're aggressive and if you want to make good returns, focus on small cap and mid cap space. So here again, sales has kind of been flat. In fact, they have not been doing very great since the last few years. Sales have gone down. It's probably because of the publishing business and other businesses not doing well, like music broadcast and all of that. Right here, the PAT operating margins have been very good. So overall, they are a profitable company, but just that they have not been able to grow their sales, neither the profits. So both have been kind of stagnant. So can something change here? I don't know. Maybe yes, maybe not. But charts are saying that a downtrend is over. Right? The stock has been consolidating since many years. It has been going down, and now it is forming an uptrend. Now this is a nice setup, and we are finally breaking out here after almost 6 months tight consolidation over here. We are breaking out. So I think we might get some good returns in the short to medium term, at least, if not in the long run. The problem here is that in case the stock consolidates more, you might have some, you might get annoyed because the stock might correct a little bit, but I think we might head higher eventually in the next 6 months or next 2-3 years, right? So on the weekly charts, if you see also we had a nice breakout. Okay, so I don't have the weekly charts here, but it's a nice setup or a nice 6 months consolidation breakout here. So you can buy the stock at current market price, which is around levels of 80. You can keep a stop loss around 70 here, and you can look for targets of around 130 levels over here. Okay, so that's the last stock for today. I hope you did enjoy my analysis of this video. Now, in case you have a lot of questions around how you should be trading, what kind of setups you should be looking forward to, do you want any strategy? There are a lot of videos I've done on my channel. Do check them out. It might be really helpful for you. So otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.